In this chapter, we're discussing about Sensex. Okay, Sensex is a very popular term in the area of stock market. So let us see what it is. So we have discussed earlier that BSE stands for Bombay Stock Exchange. It is the leading stock exchange in India. As we discussed earlier, stock exchange is a place where shares are traded. Okay, and we discussed earlier about primary and secondary market. Please refer to the section to refresh your concept. Stock markets come under secondary market. So each stock exchange has a number of benchmark indices. Okay, you can think of index as a single number that captures that particular sector. Okay, like for a student, you might talk of grade. Okay, A grade or A plus grade. There are so many subjects a student studies. Okay, so they say there are 10 subjects, starting from English to sciences, social, and all this. Each subject they get individual marks, but you consolidate all that and say give a rank or grade, A grade or B grade. Okay, so that single number or figure, say percentage, 80%, 90%, that single figure will capture the entire performance of that student. Okay, one single number. So advantage of that is you need not remember all the individual marks, and that's not relevant. Okay, that single number will in a way tell us how bright the student is. Similarly, there is something called index, which is a single number. Now the stock market might be having a lot of companies. We spoke that BSE has more than 5,000 companies. Yes, you can track the prices of each and every company, but there's something called an index, which is a single number that captures the entire stock market. Or if you want, that captures the entire sector, a particular sector like a steel sector or cement sector, fertilizer sector, IT sector. Okay. For example, let us say we are focusing on textile companies. All textile companies. So there are more than 5,000 companies listed on BSE. Out of those, we have selected only the textile companies, and we are tracking the price of only those companies. So what does that tell us? So if we focus on only those companies, in a way we are getting an idea about how the industry is performing. Okay. Say for example, in the cement industry, which depends on a lot of construction activity. Okay. Because if there's a lot of construction activity like housing and contracts and all, there will be a lot of demand for cement, and cement industry will be doing well. Say for example, the industry is doing very badly. Maybe the government is cracking down on real estate transactions and black money, so real estate activity is coming down. Okay, there are less orders for cement companies, low sales, low profit. So this will affect the share price, because after all, share price we discussed earlier depends on the outlook of the company. For example, I hold a cement company share like Ultratech, and if the current share price is 4,000. The reason why I'm still holding it is because I expect the price will rise. Otherwise, why will I be holding it? I'll be selling it. Okay. If I think the price will fall in the future, I'll be selling it. So, if the cement industry is not doing well, which means Ultratech Cement being part of the cement industry will also not do well, the share price will fall, because the buyers will now want to dispose of the stock. And if all the cement companies, because this decision of the government will be affecting all cement companies, it will be the same for all other companies. Just like Ultratech Cement, people holding shares of other cement companies will also be selling their shares. So as a whole, if you see, the shares of the cement companies will be falling. This is just mirroring the industry as a whole, isn't it? If all cement prices are falling, see, if a share price of one particular company is falling, that is an issue that is only particular to that company. Maybe say the executive, the CEO of a company has quit. That is something related to only that company. It will not affect the share price of other companies. But if share prices of all the companies are falling, there is something wrong with the industry as a whole. In this case, the government announcement. Government is cracking down on real estate transactions. Okay. So this is just mirroring the industry. So by focusing only on shares of a sector like cement companies, we get an idea of the cement sector as a whole. Okay. Note a very important point here. We need not track the share price of every cement company in the country. Say the top 100 cement companies account for 90% of the cement industry, and the rest are all small players. Okay, so we can just focus on those 100 companies itself, because that's enough to get the pulse of the cement industry. See, this is a very key point. You need not track each and every company. Even in the stock market, maybe there are hundreds of companies belong to your sector. Just by picking up on the top companies, which account for a bulk of the revenue, bulk of operations, if you concentrate on those companies, their performance will in a way tell you about the performance of the sector as a whole. Okay, so for that purpose, there are sector benchmarks. In stock market parlance, we call this indices. Okay, sector benchmarks, and these benchmarks will be tracking a few important companies in the sector, not all companies, few important companies. By the same logic, instead of focusing on a particular sector, we can focus on all the companies that trade on BSE. But again, the same logic applies. We need not watch the performance of all the 5,000 plus companies on BSE. Say for example, we take the top 30 shares. Say these top 30 companies shares are traded in high volume, and they account for a major part, a lot of transactions. Say there, we'll come across a term called market capitalization, which we'll discuss in future. But say these 30 companies, that in a way tells us is just the product of the number of shares traded at the stock price of the company. Say a company, there are 1 lakh shares of a company are trading on the stock exchange. Trading means they are available for sale, okay, or people are buying it. That's the transactions, okay. So the 1 lakh shares of the company trading, and the current share price is 100 rupees. So 1 lakh into 100 is 1 crore. So the market capitalization of the company will be 1 crore. So when will market capitalization be more? It will be more when there are more shares, outstanding shares are trading, available for trading, or when the share price is high. It usually happens for big companies, isn't it? Share prices will be high for companies which are doing well, which are big companies. Similarly, the number of shares are higher for large companies. So market capitalization will be higher for higher companies. So these 30 companies which we are tracking will usually be the companies which have very high market capitalization. So in a way, we can think of these are very big companies of the country. Okay. So if we focus our attention only on these 30 companies, so now here we are not restricting to any particular industry. That example is over. Okay, that cement example is over. These 30 companies are coming from a variety of industries. Maybe 30 out of these 32 are coming from the say sugar, 5 are from the IT sector, 1 is from the FMCG, 1 from the telecom. So it's a mix of all companies. So in this case, the share price movement, if you track only the share price of these 30 companies, in a way this share price movement will be capturing what? In the earlier example, we have taken a few cement companies, and their movement we said is mirroring the performance of the cement industry. Now if we are tracking a 30 companies, top companies across different industries, and we are tracking their performance, say all of them are moving up or moving down. What is capturing? In a way, isn't it capturing the economy as a whole? See, that is the key point. These companies' performance will be mirroring the performance of the economy. Okay, let us see this in detail. Okay, so we have discussed earlier about market capitalization. It is the product of number of outstanding shares in current market price. For example, if a company has say 1 crore outstanding shares and the current share price is 100, the market capitalization is 100. And I told earlier, companies with large market capitalization are very large companies, successful companies, because only the share price is high, this figure will be high. Okay. Now, number of outstanding shares will be constant. That won't vary every day, but the price will vary. Okay. Market capitalization is also sometimes called as market cap. Okay. So if you hear the term market cap, it's the same as market capitalization. So stocks with market capitalization of 10,000 crores or more are called large cap stocks. Okay. And there's something called mid cap stocks. They have market cap between 2 to 10 crores. And stocks with market cap less than 2 crores are called small cap stocks. Okay. So in stock market, we divide the stocks of companies into 3 categories: large cap stocks, mid cap, and small cap stocks, based on market capitalization. Market capitalization is the product of number of outstanding shares and current market price. Okay. So those stocks with market cap of 10,000 crores and above are known as large cap stocks. Similarly, we have definitions for mid cap and small cap stocks. So now we'll come to the main point, Sensex. BSE Sensex is the most popular benchmark index. Okay, this is the index that the entire investor community tracks. Okay, it tracks 30 stocks which have the highest market capitalization at BSE. So you go to BSE, then I told you there are 5,000 plus companies. For each of this company, each stock of this 5,000 stocks, you calculate market capitalization. You take how many shares are outstanding and multiply as on that time what is the market price. You take the product, number of shares outstanding, into market cap. First company so and so crores, second company so and so crores. You do that for all 5,000 companies, and then you sort it in ascending order, descending order, and pick the 30 companies which are the highest market capitalization. Those companies, if you see, those companies, 30 companies which have the highest market capitalization, will be very well established, financially sound companies, because they're having very high market capitalization. And if you do that list, here we are presenting the list as of September 2017. It might vary. It doesn't vary that much, but it might, as on the data you are reading this, it might change. But these are the 30 companies. And if you see the list, these are very big companies. Okay, companies like Reliance Industries, Tata Motors, SBI, Infosys, Airtel, all these are big companies. And that's why what we are doing here, we are tracking the performance of these 30 companies. Similarly, I told you earlier, this is just like a scorecard for a student. Say a student has 30 subjects. Here we have 30 stocks. Say a student has 30 subjects. So instead of getting the marks of each and 30 subjects, we sort of average them, or we do something and arrive at a single figure. Say the student has got 90%, 80%, or A grade or B grade. We are capturing it in one single number. Similarly, the performance of all these 30 companies will capture in a single number. Okay, how we calculate it, it's not that much required for you, but that single figure, that index, that benchmark index which captures the performance of all these 30 companies, is the figure which you come across in financial newspapers or news channels. When they say Sensex is up by so and so points, today Sensex has come down by 400 points, or Sensex has gone up by 200 points. It is that single figure which they are talking. Okay. So we said earlier, if we track the top companies with high market capitalization, we'll get the pulse of the economy. That is the reason why we track Sensex. Okay. Because if you look at the list of the companies, it is spread across a variety of industries. There are IT companies, there are manufacturing companies, telecom companies are there, pharma companies are there, automobile companies are there. It's a mix of all companies. So that is why we get an overall view of the performance of the economy as a whole. So here in this chart, you can see the movement of the Sensex over the years, right from the 80s to latest figures. You can see how the BSE Sensex benchmark index. There are number of indexes. Okay, BSE will be having number of indexes. I told you. You can track a particular sector like IT sector or FMCG sector. But this sector, this BSE 30, this Sensex is the most popular index of all. When we say Sensex, this is the figure which you are referring to. Okay, so you can see this has increased a lot. And if you look at it carefully, you can tell how the economy was doing just by looking at the figure. Observe that sharp fall around 2008, 2009. Now, that was the period when the global recession has affected all countries, not just India. That's why there was this sharp fall around the 2008-9 period. Okay, that was the global recession. And again around 2016. Okay, towards the end of 2016, just observe again there is a fall. That was due to demonetization. And observe how the economy was doing very well from 2002 to 2008. It was almost growing up every year, 2002 to 2008. That's because the economy is doing very well. So Sensex is like a mirror of the Indian economy. Okay, it is telling you how the economy as a whole is doing. That's why we track this particular index. Okay, so briefly I'll tell you how the calculation methodology. It's not that much required for you, but just for your information, Sensex is calculated using something called free float market capitalization method. Okay, so it takes into consideration only when we say free float, it means only those shares which are readily available for trading. So it will be excluding promoters holding and government holding. Okay, that they are not available for trading. And then the market capitalization is multiplied with the free float factor to determine the free float market capitalization. Now the free float market capitalization will be divided by a number called index divisor. So this is like a link between the base period. Okay, so what it helps us to compare the index over time. So in the above figure, we are comparing from 1980 to 2017. The reason why we are able to do that is because of this index. Okay, because if we don't have this index divisor, the figures across years will not be comparable. That's why we divide by this index divisor. Okay, so the base year for Sensex is taken as 78, 79. A base value is 100 index points, and now as of now it's more than 30,000 points. Okay, so if you see in financial newspaper something like this, usually you see something like this. Okay, Sensex figure is so and so, it's up and down or so and so points percentage. There will be opening figure, there will be a previous closing figure, intraday high, intraday low, 52 week high, 52 week low. Okay, so what it's telling you is telling you that particular day's value. So in this example is 32,389.96. It's telling you how much is increased or decreased over the previous day. So In this example, it has decreased by 194.39 points compared to previous day's closing. Okay, it also that fall is as a percentage of 0.6%. Then intraday high, intraday low is that during that particular day, I told you that the prices will be going up and down. So this index will also be going up and down. So within that day, what is the highest it has reached and what is the lowest it has reached. Now the closing figure need not be the high or low. Okay, it keeps fluctuating. But within the day, what is the peak it has reached and what is the least it has reached. There is the intraday high and intraday low. In this example, 32,663.06 is the intraday high. It has reached a high of 32,663, but it has closed at 32,389. Okay, so after reaching high somewhere again it has fell down. Intraday low is 32,319, and then we can also have during the last 1 year 52 weeks was the highest and lowest. Okay, so the reason is why these values are keeping changing continuously is because the current market price keeps changing as people trade the shares at different price. So within the day, Sensex will touch a very high value, it will fall, it will again rise, and so on. Okay, so that's the basics of a Sensex. So in this chapter, the questions you need to be aware of: what is full form of BSE? Is stock exchange primary market or secondary market? What is meant by index? It's a benchmark index we discussed. Why do sector benchmarks track just a few companies and not all the companies? Because it's not required. You need not track all the companies. It doesn't make sense because small companies will not be contributing that much to the overall numbers. So just you concentrate on the say top 10 or top 20 companies, and that will be giving you a fair enough indication of the overall sector. What is market capitalization discussed? What is large cap, mid cap, small cap? What is BSE Sensex? How many stocks does BSE Sensex track? 30 stocks. Okay. Name some companies which stocks form BSE Sensex. Why can tracking Sensex give us an overall view of how the Indian economy is doing? Or why is Sensex like a mirror of the Indian economy? We discussed this. What is free float market capitalization? What is index divisor? What is importance? Its importance is it enables us to compare indices across a period of time. What is meant by intraday, intra-high? What is the current level of Sensex? This is a very important question for your interviews. Just look up the latest. This you can get in just open the newspaper. You will be getting this figure. Okay, this is the current level of Sensex. How is Sensex moving over the past 1 week, 1 month? This also you should be prepared for interview. Whether it's increasing or decreasing, that is more important. So over the last 1 week or 1 month, what is the trend like it? Whether it's overall increasing or decreasing, and the reasons for that. So they might also ask you, how do you think Sensex will move in the coming month? Okay. Then they might ask you, tell me some stocks which you follow and why should I buy them, like that. I mean, this is an advanced question. Unless you are very much interested in tracking individual stocks, it's not required for you. Okay, but these are the questions you need to be prepared for your interviews.